Good afternoon, everybody. Welcome to today's live event. This is Andrew Wilkinson with Interactive Brokers Webinars. How are you? I have with me on the line here, Dan Sheridan from Sheridan Options Mentoring. Dan's going to be talking about, I think, the left wing or the right wing. We talked about one wing last week or a couple of weeks ago, and we're going to cover the other wing on the iron condors. Is that right, Dan? Have I got that right? We're talking.
Well, no, we're going to maybe get a little more into it. This will be part 2 on iron condors. I think a little more on adjustments and just trying to step it up a little bit, going from maybe what it is to a little more, it's like beginning fettuccine Alfredo. Now we're getting into a little more, I won't say complicated, but a little more information on it. I don't know if that's a good way to say it. Part 1, part 2, just kind of build on what we talked about last time, hopefully.
All right, I'm going to make Dan an organizer so that he can see any questions coming in. Dan, don't panic. You may lose your audio for about 5 seconds. Just bear with me. Okay. Now, Serge asks a question right out of the gate. Is it possible to get part 1? Part 1 is on the website, Serge, and for everybody else who's wondering. So if you have a look at ibkrwebinars.com and go to previously aired, I can't remember the date, or you can search by contributor and look under Sheridan's Options Mentoring and see all of Dan's wonderful webinars with us and just replay that at your leisure. You will receive a link to the recording of today's session a couple of hours after Dan's wrapped up. I'm going to put it onto slide 2 so you can see the disclosures as I'm going through my housekeeping. As I say, we're recording today's session. Please do use the chat panel to ask any questions of Dan. And Dan likes to ask questions himself, so please make a point of using the chat panel to give him the yes or the no answers when he asks questions, so we're all on the same page. And the handouts from today's section are also from today's event are also posted onto the handout section of the GoToWebinar software, so you can access those at any time, and they will be available as with all other events from ibkrwebinars.com. Dan, take it away.
All right, welcome everybody to the seminar today. This will be part 2, trying to build a little bit on what we went over last month on these strategies on the iron condor. And again, this is for educational purposes today. Andrew, you could go to the next. Iron condors part 2. And we're just going to get a little more into managing the trade. Like any trade you put on, this is a craft. Right? Whether it be an iron condor, a calendar, a butterfly, a covered right, there should be some type of plan, right? How do you set up the trade? Profit target and max loss. If you're going to adjust, when to adjust, how to adjust, it's a plan, basic risk management. And so that's what I'm going to look at today. Is just, okay, it's one thing to say the word iron condor, it's another thing to put an iron condor or any type of trade on. But when would you put it on? How do you manage it? What do you do? How do you do this on a regular basis? That's what we're going to try to go at today. And we're going to look at 2 examples: 0-day iron condors, which are popular, and 30-day iron condors. I do them both. So that's what we're going to get at. 0-day iron condors is exactly what it sounds like. 0-day, you put it on today, get it off today, so you're not susceptible to it expires today, you're not susceptible to a price move or a gap or overnight risk or anything, because you're putting it all on today. A 30-day iron condor is, the expiration is 30 days. So that would be like May 18th if I put it on today. So it's a different animal. They're not better or worse. You have more price risk. Can make more money on the 0 days, but you have more price risk. You have less risk on a 30-day iron condor, but it takes a little more time to percolate, like a good cup of Folgers coffee. So we'll go through both examples today, and hopefully you get a little more. You say, what's my goal for today? My goal for today is that you take one of these strategies that I'm talking about in the webinars that we do, and you practice the craft. This is a craft. This isn't you getting the rules and now you have the money machine. This takes, experience. Do it. If you're going to get good at anything, you've got to do it 20, 25 times, right? It's a craft. I think if you approach it that way, you'll stay on planet Earth and you'll be in good shape. So Andrew, let's go to the next. Yeah, so I'm not going to get into Grant 0-day iron butterflies today, but I will, and that might be a good one. Next one, talk about iron condors. Iron condors, this is an example of an iron condor. Iron butterflies are very similar, but an iron 0-day iron condor, this example. So I'm going to just park here, and we're going to talk about, Andrew, let me just see the next slide, just so I can remember. Okay, let's go back up to the picture. So we're going to park here a while, folks. And what I'm going to park, I'm just going to we're going to park for 10 minutes on 0-day iron condors, right? I'm just reading, keeping up with. Now, and so let's go over this. But one thing I want to get at is this. When you trade, let's say you do a 0-day iron condor, and you take the principles that I talk about today, and you do this. When you do 20 of these, are you going to be, is a lot of this going to get in your blood? A lot of the questions that you would ask today, a lot of the thoughts you had, will it go out the window once you've done 20 of these? Will you be getting better and starting to understand once you've cooked something 20 times or done it the 0-day? Yes or no? Say yes. Yes. Should you get better after doing this 20 times? This is a test question just to see. How come I'm not seeing anybody say yes? I'm in the questions. Can you guys type in the question? Can you put a response in the questions? Or am I looking at this a different place, Andrew? Let me see. 0. Okay, there it is. I'm sorry. Okay, I was hitting the wrong. Thank you. Okay, now I'm on the same page. Now, so let's park on this trade. 0-day iron condor, and I'll give you as much information as I can give you in 10 or 15 minutes about this, and then we'll go on to the next one. So let's talk the mechanics. I'm selling, you can see there the green graph is at expiration. The vertical axis is the price of SPX. So I think I took the example, SPX was like 51.70, right? So the foundation of an iron condor is a short strangle. I'm simply selling an out of the money call. In this case, you could see that 52.20 strike. And I'm selling an out of the money put 51.35. So my shorts are about 70 points away. So I'll talk mechanics, then I'll get into the practical. My wings, I put 10 points away. So the whole reason to do this trade is for the shorts, right? I'm selling an out of the money put and call. And my hope is that, right, the price at 51.70, if it doesn't go below 51.35 or above 52.20 by the end of the day, I collect my whole credit on this trade of $1. And the margin of risk is $900, so I'd make about 10% in the day, right? So the whole reason I'm doing the trade is because of my shorts. I'm saying if I sell the 51.35s, I sell the 52.20s. If we land between those two, right? We put it on at 51.70 in the red, but we're selling the 51.35 put 52.20 call. If we land between there, by the end of the day, I make my entire credit. The longs are there for one purpose only, to hedge. My hedge here, I bought my out of the money call 52.20, 10 points above. I bought the out of the money put 51.25, 10 points underneath. Those are strictly hedges. You say, Dan, why don't you just sell the naked call and put? Because that will jack up my margin. My margin here is only a risk is $900. If I went to Interactive Brokers and just sold the call and the put, my margin could be, what you say, Andrew, $20,000, $30,000 or more, right? In the SPX, a $5,100 vehicle, to sell a naked call and put, that margin's going to go through the roof. Do you agree, Andrew?
That's right, Dan.
Yeah, it's going to be, so that's why we don't do it. And you say, well, Dan, I have all this capital in my account. I don't care. Your yield's going to go down, right? You won't be, because you'll be trying to make $100, the same credit, or you'll be making, well, you make a little more, but it doesn't make sense, right? So this is the gist of an iron condor, right? We have this room. Now, let's talk about some other things. So on a 0-day iron condor, let me just give you some practical information here. When do I usually put this trade on? I'll usually put this trade on, I'll wait a couple hours, right? Or at least an hour to 2 hours. Why? I want there to develop a range between the high and the low. You with me? Right? I don't, I mean, you could put one on in the early morning, but at least an hour or so, especially if there was like a, you have news coming out in the morning, a jobs report or Fed something, it could get the market going. Now, so these are some things I look at as some general guidelines. I'll wait an hour, hour and a half, two before I put it on. Number one, because that gives the range, the high, when I say the range, the high and the low. Number one. Number two, if the market is already moved, what do I kind of like in SPX putting these trades on? I don't like the range to be more than 30, 40 points. If the range is 100 after the first hour, an hour and a half, that means things are getting a little goofy. It doesn't make sense for a range bound trader. Now, if you look at the last week in the market, we've had some bigger price moving days, right? So I'm kind of analyzing things the first hour, hour and a half, as long as it doesn't look too crazy. The range is respectable. We're not down, 70, 80 points in the SPX. There's no news coming out in the afternoon. Fine, it's a candidate to go, right? And at that point, what I will do is I will look for just a consistent, I will pick my short strikes by looking at the delta. So I want to go out of the money. Generally, as a guideline, again, we can go all day on this, but I will pick my short strikes by maybe a 10 delta call and put. So that'll make it a high probability trade. So I pick my short call, look for a 10 delta in the calls, look for a short put, look for a 10 delta in the puts. Now, and I'll buy my wings out of the money call, out of the money put. If you're a beginner and you haven't done many of these, you should do this paper trade, your first 10 trades, so you understand what you're doing. And then when you come into live, you do your first live contract. I would do it 5 wide. What does that mean? If I sell a 52.10, here I'm buying my wing, the 52.20, 10 points away. If you're a beginner, buy 52.15. And on the downside, instead of 51.25, buy 51.30. That means you'll have $500 of risk, and then whatever your credit you bring in less. So it'd be around a $400 trade. This is going to be a $900 trade. So can you do a $400 trade in a $5,100 vehicle like SPX? Yes. Do 5 wide iron condors. As you get more comfortable with the strategy, I would go 10 wide up to 20 wide. Does that make sense? Does everybody understand? How many of you understand what I've said? Yeah, I mean, a question Grant put said, wouldn't the risk to reward be better doing 5 wide wings with more contracts? You know, it doesn't matter. You could be, thank you. You could be, yeah, I don't think there's a clear answer on that. I think whatever you're comfortable with on that. Wayne says, I've noticed that the SPX 0-day volatility crush is happening a lot later in the afternoon. Is that because more people are doing 0 days or because of the recent? I don't know on that. Let me take a pass on that one. But so this is the iron condor, right? And that's how I would structure it. And I wouldn't really do any adjustments on a 0-day iron condor. And so I'd put it on, but here's the key. I want to be consistent. I want to play this on a regular basis. I'd start, you know, so here's one contract. I have a risk of $900. And so basically the way I would trade this is say, I'm looking to make 10%. 10% on the credit? No. 10% on the risk, right? The margin here is the difference in strikes, 10, $1,000 minus a credit that's $900. So I'm looking to make 10%, you know, in this case, let's say $90. So where would I buy the credit? Where would I buy it back in? If I sell it for $1, I'd buy it back for 10 cents debit. That's 10% of 900, that's $90. So when I'm looking to make a 10% yield, it's not 10% of the credit. It's 10% of the risk. So when this dollar credit goes to 10 cents, I buy it, you know, theoretically you buy it back in, right? Now, when the trade goes against you, so I'm looking to make 10%, in this case, $90. My maximum risk is going to be 1.5 to 2 times what I'm looking to make. So if I'm looking to make $90, right? If I'm looking to make $90, I don't want to lose more than 1.5 times to 2 times, but let's say 1.5 times what I'm making. So if I'm making $90, what's 1.5 times $90? What's 1.5 times $90? What's 1.5 times $90? $135. So when this dollar credit gets to $2.35, I'm stinking out. I am out. How do I get out of it when it goes against me? I'm only getting out of the bad side. What's the bad side? If we go up, it's the call side. If we go down, it's the put side. Right? Now, somebody said, can you explain again how you select the strikes using the deltas? I look for the way I pick the strike. In the puts, I look for a 10 delta that I sell. In the calls, I look for a 10 delta. That's what I sell. So it's going to be about an 80% probability trade. 10 delta call, 10 delta puts. Now, how many think that's an easy plan, right, to follow for 0 day? How many think that's an easy plan to follow? Let me talk reality. Reality is 80% of you, if I said, stick with that 10 weeks, I would bet you Portillo's hot dogs that out of this group here, right? I'll make a challenge right now, right? And I'll even trust you, right? Do this. Now, I'm saying do 10 trades. I didn't say do every day, right? Do this 10 trade. You could do it paper, right? Which I'd recommend. If you've got experience with these, you can do one contract 5 wide. That would be a $400 trade, right? But here's my challenge. You do this 10 trades, right? Doesn't mean 10 days in a row. You do this 10 trades. And you send me an email, a spreadsheet, just something coherent. You know, put the trades down. I did it. I'll give you a month free to all of our teaching classes on our site. Deal? Yes? You're supposed to say, Dan, that's nice of you. Come on, you didn't have to do that. Yeah, right? A month free, right? Now, why am I saying that? Because now it's got to be coherent. You got to understand, I'm doing this, I know it. So if you're going to try to buffalo me and make something up, I'll catch you, right? I want to see the trade. I want to see, okay, this is trade one. Just here's the information. SPX at blah, blah, blah when I put it on this date, right? These are the strikes I did. I did it for dollar credit, bought it back for 20 cents. Trade two. Just as simple like that. Everybody get it? And send it to me, Dan. I just moved websites. Dan at SheridanRiskManagement.com. Dan at SheridanRiskManagement.com. And then at the end of the month, I'll wait on a day and we'll do it. Now, again, this is practice, right? So I'm not saying I already gave you some information. I'm not doing it necessarily every day. And we'll come back to that. All right, now let me do this. So that's the 0 day. Let's talk a little more practical. What are some other maybe advanced questions or things that you want me to cover on the 0 day? Practical stuff. I'll think of some other advanced or practical things you want to cover on this, right? On the 0 day iron condor. If there's any questions, okay, legging in. Now, could you leg in? What does that mean? Legging in means, can I do the call side first, then the put side? Can I do the put side first, then the call? Yeah, I mean, if you're pretty good at technicals and you look in the morning and we're at resistance, you could do the call side first, and then when we go down, do the puts. I'm not really any good at technicals, so I wouldn't trust myself, but yes, you could leg into this. Lou says, why not a 15 delta or a 20 delta? You could. I took a 20. Here's the pendulum here. The higher the probability, the lower the credit. The bigger the credit, the lower the probability. You can't have your cake and eat it too. So here, if I wanted to get on this particular trade, could I get a $2 credit or a $1.50 credit? I could, right? I'd have to just bring my short strikes instead of 52.10, come down to 51.90, 51.80, 51.70, right? Take my short put, go from 51.35 up to, closer to where the price is trading at. So if I come closer, I can get a bigger credit, but I don't have the probabilities, right? So here the credit is $1, my risk is 900. So I have a risk, you say from a risk reward, make 100 to lose 900, is that good? From a risk reward, no, but that doesn't make it a bad trade. What makes a bad trade is the person managing the trade. This has got a very high probability. So yes, you could get a little, instead of a 10 delta, you could sell a 20 delta call and put. You could probably get out of the trade a little quicker. You could do a 20 delta call and put. Just be consistent, right? The hardest thing for you going to be, when I said do this for 10 trades, it sounds easy, but again, I'm guaranteeing you, there's 122 people here, and I will report on this next month when I come on for a webinar. I'm telling you, I've been doing this a long time, right? Prove me wrong. I'd be shocked if I got more than 10 responses, right? And it's not costing you anything, right? And I'll even critique when you send it to me, I'll critique it. You'll get a free month of just classes to help you. You say, why? Dan, why do you think people get busy with life, right? And they're not, because this takes passion, but it takes craftsman mentality, right? Are you going to get in the kitchen and make 10 fettuccine Alfredos in a row? People are, they don't, I don't know, but it won't happen, right? So I just looked at the amount of people who were in here live. Let's say it's 124. I could be wrong, but I'd be shocked if I got over 12, right? Which to me, if you're going to come and spend time on a webinar and you're not willing to practice the craft, come on, 10 push-ups, let's go. Are zero options liquid? Depends on the vehicle. If you're trading SPX, they're very liquid. Very liquid. Kathleen says on other occasions, my stops and limits were not getting filled. Is the position that I'm in a paper account? I think so. And it depends. You got to get used to, if you're trading live, the different types of orders available at Interactive Brokers and what they mean and how to get out of it. I don't generally use market orders on these. I'll either get out of it myself, or if I'm not available, try to put some order that will get me out. But now I don't, again, remember, if this is going against me, I'm only getting out of the bad side. So I'm only getting out of one vertical. And so I'll try to get out of it. You're going to pay a little bit more, maybe mid prices plus 10 cents. If you'd have to look at and maybe Andrew can talk to him, maybe at the end of the webinar, in terms of the types of orders you can put on to get you out. And I could tell you kind of what I would recommend. In your experience, how many times have you had to exit both sides because the underlying price breaches the risk tolerance levels on both sides? Very little. It could happen occasionally, but I would say 1 or 2 times. Let me see what else. All right, let me see anything else. Why does the delta you choose matter if you're going to get out at a 1.5 loss? That's a good question. I do it because of the probability. Like, it gives me a little more room. I'll just leave it at, you want to be consistent, right? Because if you sell something closer to the money, you don't have as much room, right? But the key is consistency. Now, let me say this. What's the difference? Why do people like 0-day iron condors right now, right? We're trading VIX today near 18 VIX, the highest level all year. Most of the time this year, we're only 3 months into it, 12 to 13 VIX, 13. Why do people like 0-day iron condors right now? Why? What's going to be different about doing an iron condor when the VIX is 18 versus 12? What's the difference? What's the difference? Here it is. You get a little better credit, but you get a lot more room. If you were doing an iron condor, 0-day iron condor, 2-3 weeks ago when the VIX was 13, you were only getting maybe 20 points, 25 points from the current underlying price. But now with VIX at 18, just to give you an example, as we speak, with VIX at 18, if I were to put a 0-day iron condor, even now, and we're at 11:30 Central, just give you an example, right? We're at 11:30 Central. If I look at a 0-day, right, that would be a 0-day trade that expires today, April 18th, right? The expected move for the rest of the day, just to give it, because we're already at 11:30 Central, the expected move for the rest of the day is 22 points. But if I look at right now, if I was going to put it on a 10 delta in the puts, right now, it's a little later, I would put it on earlier, 10 delta is 5,000, right? So right now, at 11:30 Central, later than I normally would put it on, a 10 delta would get me, we're at 5,040 in the SPX. I could get to 5,040 points, right? That's because of the high VIX. On the upside, right now, with the market at 5,040, if I look at a 10 delta, I can go get a 10 delta right now on the upside, close to 50, 80, 40 points. Does everybody get that? About an hour, hour and a half ago, if I did this at 10 delta, I'd probably get 50 points. Versus, so what's the difference with an iron condor today with VIX at 18 versus 3 weeks ago with VIX at 13? 3 weeks ago, you look at it and say, Dan, I'm only getting 20 to 25 points to my short strike. Today, with VIX at 18, you're saying, Dan, if I put it on within the first 2 hours, I'm getting almost 50 points and I'm getting a better credit. But has anybody thought why the VIX is high? The VIX is high because the market's gone down and you're getting a little more volatility, but 50 points is pretty good, right? Right? So you've got, if you put it on right now, you'd have 40 points either way. And on a day like today, if you said to me, the range today in the SPX, the low is 5,012, the high is 5,056. So the range is 44 points, right? Right? The range is 44 points. We're kind of in the middle to a degree. You know, paper trade, right? I'm going to help you with your first trade. You got it? How many are in? How many? I'm bringing the horse to the water. So your first trade, here's what I want you to do. You got to write it down. I'm giving you the first trade out of the 10. You're going to paper trade, put down, right? It's 11:34 Central. It's Thursday, April 18th. SPX is at 50.37, 50.35, 50.35, 50.36. And you're going to go in, and this is your iron condor you're doing on paper, right? Because I'm giving you the first one, a freebie. You're selling a 10 delta. I told you you're selling a 10 delta, so I'm just giving you this. Here's what you're doing, and then you're going to show at the end of the day. So you'll get this today. You'll get some immediate satisfaction, or you'll see how it works. You're selling a 10 delta put, so you're selling the 49.90 put. That's close. You're selling the 49.90 put, you're going to buy the 49.80 put on paper, just because I'm doing 10 wide. On live trade, I want you to do 5 wide. But so you're selling the 49.90 put, you're buying the 49.80. You with me on this? Everybody with me? All right, so you're selling the 49.90 put, 40 points away, buying the 49.80. On the upside, you're going to sell the 50.70 and buy the 50.80. I'm going 10 wide. You're doing a 10 delta for each, and I'll give you what the credit is, so then you'll have it. So you're doing so you can follow this. So you're involved in this for today. Right? You're selling the, what do we say on the put side, you're selling the, I'll just give you the credit real quick. So this is as realistic, and then you're going to follow this. So you're going to go into your interactive brokers, keep an eye on this. Matter of fact, no, I'm just going to tweak it. I'm going to sell the, I'm going to get exact, the 49.95 put. So put down SPX at 50.39. We're moving around here, 50.39, and I'm selling the 5,000 put. Give me a second. I'm selling the 5,000 put, and I'm buying the 49.90 put. On the call side, with SPX at 50.39, I'm selling the 5,075 call. And buying the 5,085 call. And one second. And you're bringing in, just like this example today, about $1 credit. You could probably get maybe $1.05 or something. Any questions on that? This is your first trade, right? For those who want to do it. So you can follow that. You'll know today, right? Yeah, you cannot see the, I'm just telling you, Jen, I'm just doing this on a separate screen. So I'm telling you, so here it is, write this down, get a pen or a paintbrush, or if you have a good memory, I'll give you all the information. You write it down and follow it. You ready? SPX is 50.39, write that down. Put down around this time, 12:38 Eastern, 11:38 Central. You're doing a 0-day iron condor. You're selling the 50.75 calls. You're buying the 50.85 calls. You're selling the 49.90 puts. Excuse me. You're selling the 5,000 puts, buying the 49.90s. Again, you're selling the 50.75 calls, buying the 50.85s. You're selling the 5,000 puts in the April 18 expiration, buying the 49.90s. And you're doing this for like, we could probably get $1.05 or $1, put it at $1.10, $1.10 credit, $1.10 credit. Everybody got it? Yes or no? I've got what you said. Yes or no? How many did that? All right, so let's do it together. I sold it for $1.10 credit. What's my margin? I sold it for $1.10 credit. What's my margin? It's 10 wide. What's 1,000 minus $1.10? What's 1,000 minus $1.10? $8.90. So $8.90 is my risk. What are we looking to make? 10%. 10% is about $90. So when the $1.10 credit goes to 20 cents, I could take it in. You could let it expire. That's practical. Just let it expire because you're going to buy the whole thing in for 20 cents. But that's the idea from the profit. Got it? That's the profit target. Dan, what's the max loss? What's the max loss? The max loss is, let's just say I lose 1.5 times what I'm looking to make, right? What am I looking to make? I'm looking to make 90 bucks. What's 1.5 times 90 bucks? $135. So if this credit goes from 110 plus 135 to $2.45, you're going to take the bad side off. If we're going up, it's the calls. Going down, it's the puts. Everybody got that? But what makes the toughest part of this trade? What makes the toughest part of this trade? If you guys win your first 3, 4 trades, is it easy to continue? Yes or no? Right? If you win your first 3 or 4 and you lose your 5th, are you okay? Yes or no? Yes or no? Yeah, of course. But what if you lose your first 2? How many of you have the fortitude to continue? That's tougher. So that's why I'm saying you do 10. And so, Dan, you say, how do you get the fortitude to continue? When you're becoming a craftsman, keep your size small, right? Yeah. Because it's a credit. That's why I think you start paper trade, then you do 5 wide. All right, we better move on. If you have any more questions on this, the 0-day advance or anything, or if there's questions or things you didn't understand, or if there's things I didn't get advanced enough, or you think this or that or whatever, email me. But my email will be dan@SheridanRiskManagement.com. All right, Andrew, you want to go to the next one? Good question. At what VIX level do you stay away from this? Great question. I will trade this at almost any VIX level, right? But here's what I want. Great question by Matt. So Matt says, at what VIX level would you trade this? I would trade this at almost any VIX level, but what do I want? This is a range-bound trade. So if it's a range-bound trade, what do I want? I want some range-bound. I want some two-way. Have we had much two-way action in the last 3, 4, 5 days? Yes or no? In the SPX, the last 3, 4 days, have we had much two-way, or has it been one way going a certain direction? What has the SPX done? We've gone one way, we've gone down. So right now, you can't say we're really range bound, right? Right? You can't, because we're going down. So I'm looking, so even on 0-day trades right now, I might be doing, if your normal contract size is you're up to doing 2 of these, I might only do 1, because it is a little, it's a little uncertainty. Now, the beautiful part about 0-day, you're not going overnight, right? So when it's not very range bound, I might go a little bit less size. All right, 0-day iron condor setup. We talked about it. 10 delta call, 10 delta put. Wait a couple hours to put it on. Profit target max loss, 10% profit target max loss. Don't lose more than 1.5 to 2 times what your normal profit is. When to adjust. I have adjusted these before, but I would rather not on 0-day trades. So I'm really just doing on a 4-step risk management plan, the setup, profit target, and max loss. That's it. Because on 0-day, I'm not really getting into when to adjust or how. If you've done 20 or 30 of these, could I do one adjustment? Could you roll out the bad side or roll up the good side? Can you do something like that? You could, but I just think with 0 days, the key is just, I've got to plan it and do it. Right now, here's another thing I'll throw in before I go to the next slide. How many know what the word scaling means? How many know what the word scaling means? So could you do this? And some people do this. Could you put, let's say you wanted to put on a 5 wide iron condor, is going to be about $400. And let's say you get going and you might, hey, I'm willing to put $2,000 on this trade. Could you put a 5 wide iron condor on at 9:30 Central, another one on at 10 Central, another one on at 10:30 Central, and another one on at 11? Could you diversify your price risk that way? You could, right? That's one way to do it, or you can just put one on, right? All right, Andrew, if you want to go to the next slide. Iron Condor, 27 days from expiration. Now, so let's leave the 0-day Iron Condor for a second. When am I more excited about Iron Condors? When we're in the upper end of the volatility range over the last, January, February, March, the last 3 months, we're at the upper end of the range, 18 in the VIX. Could it go higher? Yes. What would it take to have the VIX go higher, the market go down more? But generally, I like a little more premium in these because as the volatility gets higher, I get a better credit and I get more room. So again, I like Iron Condor. So I think the way I set this one up and everybody could look at this is, and here would be my plan. If I want to get a more equidistant Iron Condor, have, more closer to delta neutral, like in this case, I'm selling a 10 delta call and a 10 delta put. That's what we did with 0-day. When I start getting into 27 days, if I want to get the deltas closer to 0, I'll sell a 15 delta put and a 10 delta call, right? Let me say that again. If I want more equidistant, closer to delta neutral, I'll start it out with, when I'm getting like a 30-day Iron Condor here, I'll sell a 15 delta put and a 10 delta call. That will get me closer to neutral. If I want a little bit more room on the downside, I'm a little bit more concerned on the downside, do a same delta Iron Condor. What does that mean? Sell a 10 delta call, 10 delta put, 15 delta call, 15 delta put. Anytime you do an Iron Condor where you're picking the short strikes with the same delta, it's going to give you a little more room or short delta on the downside. All right, so if you don't have an opinion and you want to do it more neutral, closer to delta neutral, sell a 15 delta put, 10 delta call. Dan, I want a little more room. I'm a little more scared on the downside. Do a same delta. You can do a 10 delta call and 10 delta put, 15 delta call, 15 delta put. That's a little bit different. All right. Now, here's how I trade these things. I'll give you a quick rundown here. So in this case, I think on this trade, I did a 15 delta put, sold the 4,900 put, and bought the 4,890. I sold a 10 delta call, 5,400 call, and I bought the 5,410. The combination of those two gave me a $2 credit. My risk, the way they do risk at a brokerage firm, they look at the difference between the strikes. I have a 10 wide call credit spread, 10 wide put credit spread. So I have margin or risk of $800. In this case, SPX was 51.67. I'm selling a 5,400 call and a 4,900 put. And VIX was lower than we are today. I think it was almost 16, but I still got 267 points away on the put side, 4,900. That's 267 points away from that number in red, 51.67, where I did it for. And on the upside, I'm selling the 5,400 strike. So kind of equidistant. I get quite a bit of room either side. So how do I manage this trade? So first is, what is my setup? The setup is, I like to do Iron Condors. Generally, I'm looking close to 4 weeks out, near 30 days. This is 27 days. That's step one in the setup. Step two, generally, I'm looking to sell a 10 delta call and a 15 delta put. That will get me closer to delta neutral on the trade, and I'll go from there. This is 10 wide Iron Condors, the credit spreads. If you're a beginner, paper trade, then do live 5 wide. Keep your long 5 points from the shorts, right? That'll be cheaper. 10 wide iron Condor will be about $800, $800 to $900. 5 wide iron Condors will be in the $400 vicinity. 20 wide iron Condors, would be margin maybe at $1,500 or so. Now, so that's the setup. How do I set up an iron Condor? Profit target, I'm looking for 10% on my margin, or $800. So 10% of 800 is $80. My max loss might be, I said 1.5 times what I'm looking to make, right? So if I'm looking to make 10% of 800 or 80 bucks, 1.5 times 80 would be $120. So if my $2 credit went to 320 against me, get out, all right? And again, this is being recorded, so I'd rather give you a little bit more information and you go back and look at it. Now, the other thing I want you to look at is my goal on a 30-day iron Condor. I'm looking to be out in a week, week and a half at the most, right? So a lot of times I'm looking a week. And just to give you my thinking, the expected move in this example for 7 days was 90 points, right? The expected move for 7 days was 90 points, right? So I'm looking at maybe what's a good distance SPX could travel as I'm in this trade. Well, I'm not looking at 27 days. I'm looking at how long do I expect to be in this trade. So if I'm looking to be in the trade 7 to 10 days, what's the expected move or standard deviation for 7 days? And in this case, it's 90 points. 90 points in the SPX. So you have plenty of room you'll still be in this graph area, generally over a week or week and a half. But let's get into the when to adjust. Generally, I look to adjust when the delta of the short option, when you're going to get in trouble, the delta of the short option goes up by about 8. What does that mean? So I'm just giving you when. When will your P&L start moving against you? When will things start getting a little, in other words, I'm giving you the point of when you're at the end of the sledding hill and things are going to start getting ugly. I'm giving you the point at when you walk in Chicago from the neighborhood. So let's say this is a good neighborhood. You take a step, you're in the bad neighborhood. You're not shot at yet, but you're in the bad neighborhood. And the longer you stay in there and the farther you go in there, there's going to be a problem. So if you look at the 10 delta call, when that goes to 18, up 8. When you look at the 15 delta put, when that goes to 22. Once that happens, are you going to be down much money? Not much. But beyond that, things will accelerate. Do you get that? How many understand what I just said? When the delta of the call you sold goes up by 8, or the delta of the short put goes up by 8, from that point on, right? In other words, when we put this trade on, I sell a 10 delta call and a 15 delta put. For the first 30, 40, 45 points in SPX, I don't care. Nothing's happening. But once you get to when your 10 delta call, or whatever the delta you sold, when that goes up by 8, from that point on, the next 50 points are going to be much rockier. Do you get that? So I'm basically telling you, listen, when the delta of the call or the put moves by 8 points, at that point, you better stink and pay attention, because at that point, the next 50, your first 50 points in an SPX iron Condor, 27, 30 days out, be fine. Your next 50 points are going to be much rockier. So I'm telling you, generally when I look to adjust is at that point. How many thinks they could follow that? So how do you do that? You can look at Interactive Brokers, my 10 delta call. Can you look at it every day? Well, when does that go to 18? When does my 15 delta put get to 22? That's telling you, okay, doesn't mean you're getting buried with this trade, but it means at that point, the next 50 points are going to be a Lulu. They're going to be problematic. Now, what's a couple adjustment ideas you can do, right? So we talked about the setup. We talked about profit target. We talked about when to adjust. I'll give you a couple ideas on adjusting. Let's just go the upside because we only got a couple minutes here. You ready? Let's take the upside. That 10 delta call goes to 18. What can I do? Let's just focus on adjusting the bad side. We go up, the bad side is the call credit spread. Does everybody see Andrew could take the ball and go to show the 5,400 call? We go to the upside. My delta, the call goes from 10 to 18. I'm going to buy my 5,400 call, buy one, buy it in, sell the next strike up 5,405. So I'm narrowing my upside 10 wide to 5 wide. That'll fix some of the problems you're going through, which is short delta on the upside. It'll smooth out the graph. How many understand what I just said? Anybody? When the 10 delta call goes to 18, buy in your short call, sell a strike 5 points higher. And then if we continue up 50 more points, it'll be a much smoother experience. It's almost like saying, okay, I'm walking, I get into the bad neighborhood. As soon as I get into the bad neighborhood, somebody hands me a gun. That's a horrible analogy. Please forgive me. I'm not, but that's it. I can handle it better. Now, what's another adjustment you could do? My 10 delta goes to 18. I take off, if it's the upside, the bad side, the call side, take it off, the whole spread. The 5,400, 5,410, take it off. And within 24 hours, reset another call credit spread at a 10 delta. We would call that rolling it up, moving it up. So taking the 5,400, 5,410 call credit spread, take it off, put on one higher at a 10 delta. So the adjustments I talked about today mainly were dealing with the bad side, right? Could you, as we go up, could you move the good side, which would be the put side? Because if you're going up, the put credit spread is making money. Could you move the put credit spread up? You could, and I could talk about that another time. But that would, if the market goes up and then whipsaws back and you brought the put side up, you could, be problematic. All right, I better cut this off. I know that was a lot for you, or a lot of stuff. I can answer a few questions, review this. If you have questions, is something maybe you had a question on and wasn't, again, just dan@SheridanRiskManagement.com. And again, I put the challenge out. I gave you the first trade today. 10 trades, right? Doesn't have to be 10 consecutive days, 10 days that you would put it on. You send it to me, dan@SheridanRiskManagement.com, and I will, I'll get you a month of classes and stuff that could be a help to you. All right, any other questions? Andrew, come on in here.
Hey, Dan. Very nice. You asked me earlier to comment on order types, and I really don't want to comment on order types too much because everybody's got their own agenda and all the rest of it.
You're right. That might be more than, I'm sure, and maybe you could direct them to educational material where they can get.
Kathleen said something like her orders fill immediately. That indicates to me she may not be, but she might be using market orders, which is always a little bit, not necessarily dangerous, but you're going to get filled immediately and you might be giving money away. My suggestion would be to use limit orders, and you could certainly look at using OCOs, one cancels other, where a certain condition kicks in. So if the SPX trades, or if an index or the SPY, whatever you choose, trades at a certain level, then an order would kick in to do something, to buy or sell one of the legs in the setup. That would be it. I'd have a look at Traders Academy, go to the order types and review some of the order types there to see what might be suitable for you. That makes sense, Dan?
Yes, sounds good. All
All
right.
right.
Yeah. Does anybody, if anybody has any other quick question or anything, or questions, let us know. But again, you know, I'll leave you with one last battle cry. Work on the craft, folks. I don't care what strategy is, what, you know, approach it as a craft and you'll go far with that. Approach it with a craft, as a craft. Focus on the risk management, keeping your losers not far from your winners. And here's the thing. You say, Dan, what's my diabolical thing in getting you to do 10 of these? I know that any of you who do 10 of these in a row will be much better off than when they started. Because by doing 10, just to follow this, right? If I watch, you know, if I do 10 trades in a row, I'm going to get a little better feel of it. So I'm just, you know what I'm trying to do? Kick you in the pants and get you going, right? To start working on the craft. So have a great day, everybody. Thanks again, Andrew, for having me. And next week, our next thing I'm thinking already, someone talked about iron butterflies, which are in the same family as iron condors, but a little differently. Instead of starting out selling an out of the money call and put, you sell an at the money call and put. So that might be a good progression to go from an iron condor to an iron butterfly, like a first cousin of the iron condor. Whoever mentioned that, thank you. But I'm thinking that might be what I'll cover next time, the iron butterfly. But thank you, Andrew. We'll see you.
Dan, thank you very much. And thank you to the audience. We'll see you next time. Bye for now.